This is a weekly outlook for gold and GBP JPY. So we're going to go through the fundamentals first and then move on to the technical aspect. Let's take a look at some of the global macro fundamentals that we are seeing right now. So it seems like we have some optimism around vaccine and around COVID as a whole, where you have vaccine rollout to exceed to 100 countries soon, and they're expecting that in the next couple of weeks, where right now the data shows that there's only 84 countries that are rolling out the coronavirus shots successfully, but they're expecting the number to increase to 100 countries. So much of these 84, or much of the countries that fall under this 84 out of the 100 that they're expecting at the moment are the developed countries. So countries like the US, the UK, Israel. So a lot of the developed world are the ones who are successfully rolling out their vaccination programs. And on the other side, more than 30 countries that have not even started or have barely started their vaccinations are the undeveloped countries, or those countries that haven't received much of the vaccinations as of yet. And they're naming one here, which is Africa. So the biggest challenge is the inequity of vaccination supplies between the developed countries and the developing countries, so the underdeveloped countries at the moment. And that's where we're seeing a lot of the variants coming out from as well, some of those underdeveloped countries. So unless they can get the vaccinations and the vaccines out to the underdeveloped countries, we're probably going to be seeing a lot more variants coming out. So that's the next step to kind of tackle, which is put out a successful vaccination program, a successful mass vaccination program, specifically in those underdeveloped countries. And here we see that COVAX, the largest global vaccination program in history, has placed orders for more than 2 billion shots, and most of them coming in the second half of the year. So we just finished the first quarter of the year, and now we're coming into the second quarter. Going into the second quarter at the moment, we're already seeing such positive news coming out, where in the next couple of weeks, again, about 100 countries, and some of them also including underdeveloped countries, receiving some of these vaccines. We could potentially start seeing some more data coming out about mass vaccination programs in some of these underdeveloped countries. And so going into the second quarter, we already have this optimism around this market sentiment, around the global macro fundamentals, and now we're setting up for the third and fourth quarter. So we're setting up for the latter half of the year, when we are expected to get majority of the 2 billion shots that have been ordered by COVAX. Let's go ahead and move on to the UK. So for the UK, we already know that the economy is starting to open up. There have been talks about restrictions easing up for businesses and for citizens. And now we have news that Johnson is pushing COVID tests for all to help reopen UK economy. So even though the economy is opening up and they do have a mass vaccination program and majority of their population has been vaccinated, even if it's only the first dose, there is concerns and uncertainty of whether or not, when the economy opens up, and of course the cases are still going to rise, but is the government and is the healthcare system going to be able to have control over these cases and not overheat, or like they did last time, or go over capacity? So that's one of the uncertainties. But they're saying starting April 9th, so which is this upcoming Friday, they are looking to make these test kits free and available through local pharmacies, community centers, and home delivery services. And then on Monday, uh, Prime Minister Johnson is due to set out the details, and on April 12th, so next Monday, we are going to see some lifting of restrictions for businesses and citizens. So let's see what these details are, and if they're going to bring in the market optimism, and they're going to bring in optimism for the overall UK economy. So for the most part, we are seeing a strength in GBP because of this optimism, because that the UK economy is opening up. But in addition to this, or on the other side, pretty much you have the economy opening up, but then there's also the uncertainty of whether or not the government will be able to handle the new cases, or the healthcare system will be able to handle the new cases. Plus, you have this little tension between the UK and the EU, so you're going to see a lot of post-Brexit effects setting in, the exports, imports, all that kind of stuff. Financial services industry has been hit pretty hard in the UK, where we've seen a lot of businesses moving from the UK into the EU. And then also recently, we have been seeing news that the EU is not exporting, or they have halted the exports of AstraZeneca vaccines that were supposed to go to the UK. And now we have the UK searching for other sources to kind of accumulate the vaccination supply that they need in order to give their population the second dose. So we have a little bit of uncertainty, but for the most part, you have optimism dominating here. Going into the US and Johnson & Johnson overall. So with the help from the Biden administration, you have Johnson & Johnson taking over a Baltimore vaccine production facility that was a major site of manufacturing error last month. So where they where 15 million doses were affected of Johnson & Johnson vaccine. So now we're starting to see a little bit of optimism in a manner that Johnson & Johnson announced on Saturday that I was assuming full responsibility regarding the manufacturing error, but now they are moving into another production facility in order to produce a lot more of their vaccines and kind of help with this quote shortage of vaccinations, or the uncertainty around the shortage of vaccinations, potential shortage of vaccinations. And so still we have a little bit of more optimism here. And then even with the vaccine schedule being accelerated in the US, which surpassed 100 million people with at least one dose of COVID-19 shot on Friday, the error at the plant shows that there are manufacturing factors that could complicate the rollout. So more than 30 million people in the US have been infected with the virus, and giving you just a little over 500,000 people who have died. So at the moment, the Baltimore facility is not authorized by the US FDA, and none of the doses administered or available in the US so far have come from that plant. But as Johnson & Johnson moves into a new plant and they start to pick up the production, we are going to see a little bit more optimism around that as well. So we have yet to see more data coming out from Johnson & Johnson in terms of production, in terms of how many more doses can we see coming out, and pretty much, Johnson & Johnson keeping on top of their vaccination production at this point, where if they have another production error where more millions of doses are being affected, it's going to slow the rollout of the vaccinations that we need in the US in order for the US economy to open up just like the UK economy is. Last week, we saw the infrastructure plan come out. So in my previous video, I did a gold breakdown, and this is where we discussed the fundamentals and specifically looking at the tax hikes. And I mentioned how I was anticipating that the Republicans are going to step in and try to kind of modify this tax portion of the infrastructure plan, and that's pretty much what's happening here. So you have one of the officials, Republican officials, saying that they're looking for ways to pay for this infrastructure plan, but again, modified infrastructure plan without raising the corporate tax. And then you also have the Senator McConnell saying that the last thing that the economy needs right now is a big whopping tax increase. So we're already seeing the Republicans stepping in, some Republican officials stepping in and kind of trying to modify this tax increase, and some are completely against it. So Biden's plan faces a tough road ahead in Congress, as Republicans have already said they won't vote for a measure paid for by tax increases. So they're all for an infrastructure plan, but a reduced one. So they may be ready to support a limited infrastructure funding in President Joe Biden's spending proposal, which would require scaling back the $2.25 trillion plan by more than 2/3. So we're going to see a little bit of more tension around this infrastructure plan before and if it is passed in Congress and in the Senate and in the House. Going on to Forex Factory. So pretty much what we have is positive news in terms of vaccinations, where Johnson & Johnson is moving into a bigger facility and also In general, COVID vaccine rollouts exceeding to 100 countries, UK economy opening up. So you have that. And then on one side, you have the infrastructure plan where there's going to be a lot of back and forth happening. We're going to see a lot of uncertainty around it. You're going to see the Republicans trying to modify much of the infrastructure plan. Obviously, the more you spend in the economy, you have to have a way to make that money back. And it seems like the administration is trying to make that money back through tax hikes. So we're going to see what happens there pretty much. Pretty interesting topic, honestly. And then coming into this week, we have bank holiday Sunday, and then also going into London session. We have bank holiday, expecting low volume. There could be a lot of volatility as well. So I personally wouldn't be trading London session. And then going into New York session, you have services PMI coming out. And as long as the number here for services PMI remains above 50, we're pretty much good. So as long as you're above 50, it indicates industry expansion. That's bringing in optimism. So even if we drop back down to 55 or maybe 56 or even 57, or obviously if you're above 58, that's going to bring in some optimism as a whole. And then you have household spending going into Tuesday. You have a ton of Euro news coming out in London session. And then in the US or in the New York session, you have jobs opening. So that's something that you want to watch out for because this is the type of data, this is the type of news that you would want to use when you're looking at or trying to anticipate what's going to happen with NFP or unemployment, things like that in the next coming weeks or so. So this is definitely something that you want to watch out for. You want to kind of take note of to see what's happening here with the jobs opening, retail sales, consumers, things like that. So these low impact news can definitely help you kind of understand what can we expect from higher impact news coming out, even interest rates. So if these numbers are low here, for example, you're most likely you can expect interest rates to be either stable or dropped a little bit more. And then when these numbers start strengthening as a whole, more jobs opening up, more people being employed, retail sales picking up, and then manufacturing PMI, services PMI, these kind of data picking up. When you see that, that's when you see interest rates increasing as well. Going into Wednesday, you have a ton of, again, your news. So you have a lot of PMI news coming out, final services. These don't tend to make as big as of an impact if you're looking to day trade or swing trade. But if you're scalping, then obviously you want to watch out for this because it could make some movements on a 15-minute or a 30-minute time frame for a short period of time. And then going into the New York session, a ton of USD news here, trade balance. You have a FOMC member speaking. So again, around this time, you definitely want to be careful. Make sure you're not getting wicked out or actually becoming a wick either. You have crude oil. So if you're trading USD CAD or oil in general, this is something that you want to watch out for. FOMC meeting minutes. These are more like summaries. And so you don't really have to worry too much about FOMC meeting minutes. And then going into Thursday, ton of Euro news here again. PPI news coming out, bond auction. Again, ECB monetary policy is pretty similar to FOMC meeting minutes, so you don't really have to worry too much about it. It's more like a summary. But on New York session, you have unemployment claims coming out, so that is another thing that you want to watch out for. So you have JOLTS job opening on Tuesday. This is something that you can use to kind of determine what can we expect on Thursday when unemployment claims come out. So that's what you want to watch out for. Then you have Powell speaking on Thursday. So definitely you don't want to be taking a trade while he's speaking because there is going to be a lot of volatility. Going into Friday, you have PPI news coming out from US, and then you also have the final wholesale inventories. And so not much this week in terms of fundamentals. A lot of yellow folders, a lot of news that would be impacting 15-minute and 30-minute timeframes as the news comes out, but nothing that will be affecting the structure overall on a 1 hour, 4 hour daily timeframes. So a ton of data, low impact data, but not so much of high impact data that would move the market way too much. Now let's get into the fundamentals. So let's start off with the yearly time frame on gold. As we can see, it's dropping down. So whenever we see some strong macro fundamentals coming out, we can always expect gold to come back down because that is a safe haven commodity. And so when there's strong macro fundamentals or macro data that come out, we start to see that a lot of the money flows from safe haven currencies and commodities back into risk currencies. So at the moment, for example, UK economy opening up and there's news about US economy opening up as well. That brings in some market optimism and that helps move that money from safe haven currencies and commodities into risk currencies. So I'm not saying that this is where investors have completely moved their money out, but these are the kind of data points that help shift that money back to risk currencies. So starting off with the yearly time frame, again, you have that resistance right up top here, right at that 1678 level. You have that rejection right into that zone. So right into the zone, you have that rejection. When we drop down to the quarterly, same exact thing. Last quarter, we closed rejecting this level right here down to 1678, 1680 flat. And now this quarter, we started kind of bullish, but as we drop down to lower time frames, we'll see how price is reacting to certain resistance and support levels. When we drop down to the monthly time frame, same exact thing. Last month, we closed with a bearish wick to the downside. We still close as a bearish candle, but still rejecting this 1678 or 1680 mark. When we come down to the weekly time frame, so on the weekly time frame, we still have price rejecting a resistance level right about here from the past 1745. So rejecting that, but last week we did close bearish without a top wick rejection. Same exact thing this week. We've opened with a lot of bearish volume. Price didn't even try going bullish at all. So we have this entire range or this entire wick that price could potentially fill if we can continue back down. And so we'll see that happening like on a 4-hour time frame or on a daily time frame as price starts to break the lows. Then we'll see price coming back down and potentially tapping into 1680, 1678 again before it continues back bullish. But for that to happen again, we need to see some market fear settling in. At the moment, what we're seeing is a lot of optimism. Going down to the daily time frame, so right into this level where you have that little bit of support consolidation right at this level, we see a rejection right into this area of 1730. And now there's a very high chance that if we fail to break above this zone right here, there's a very high chance that we can continue right back down. And in order for us to take that trade, we would need price to start breaking the lows. I would target price breaking the lows right about here. So breaking the low of 1720, because if you look at the 1720 level here on the daily time frame, what you have is price rejecting this level, creating this little support before price continues back down. Same exact thing, you have a break and retest before price pushes bullish. You have a bottom wick rejection, and this is pretty much the area where price was consolidating. And then once it broke through, there's a lot of volume to the downside. So if we can break 1720 again, I think we'll come right back down and tap into the 1690 or 1680 area. And then finally, we want to wait for fundamentals here again. Are we going to see some market fear? If we do, then we're going to continue right back up to revisit the 1730 and ultimately 1745. But if we continue to see some market optimism coming out surrounding COVID, surrounding vaccinations rolling out to developed countries, and mass vaccination happening there, and also economies opening up, then we could continue dropping back down here. And we would analyze those levels as we see those fundamentals and as we see price dropping back down. But at the moment, pretty much what we're waiting for is price to break below this 1720 area, or if it breaks above this zone, then I would want to wait for that break and retest here, at least on a 4-hour time frame, and then target that 1745 area. Once that's broken, then again, you're waiting for a stronger confirmation of a break and retest here, and then continue back bullish. So on the 4 hour, it seems like we're starting to break below the zone. We came all the way down here, made a bottom wick rejection, and now it seems like we're pushing back bullish. So we have the London session opening up shortly, so this could be some of uh, the market volume that's pushing us back right into the zone to essentially make a top wick rejection right into this area before we continue back down. But in this area, generally, you still want to be careful because this was a ton of consolidation for almost an entire week. Price just consolidated here before it continued back down. So this is a very important level. Watch out for this level. Wait for proper confirmations. Wait for price to break below 1720. And once that's broken, then you could come down and target some of these minor levels about down here. Actually, first of all, right about here. So you have that resistance, and then if I actually extend it over, then you have consolidation right into that area. Consolidation, resistance, a nice pullback to continue bullish, and then right here, same exact thing, you have a nice break and retest, resistance, and a bottom wick rejection. So once this is broken, if you want to scalp or day trade or anything like that, then you can start off with this trade down here, coming down to, let's say, 1713, and then continue back down bearish after that, tapping into about 1700 or 1796 or 1700 or 1696, and then continue back down bearish, tapping into 1680 flat. I'm going to go ahead and use a 2 hour time frame here. That's pretty much the sweet spot right between the lower time frames like 30-minute, 15-minute, and also intraday higher time frames like 4 hour and daily. So on the 2 hour time frame, we pretty much have the same exact thing. It's going to close in about 34 minutes. So I would wait until this candle closes. If this can close rejecting this zone here and the next candle continues back down, then I think we have a very nice, what would first start off as a scalp opportunity. So somewhere down here as price breaks the wick, because if you can look to the left, what you have here is this entire support area. So as the next candle continues down, after this candle closes, rejecting the zone, next candle continues down, then you have this entire area coming down to about 1720 as a scalp. Let a runner go into 1713 and then even further down. This is only if you're looking for a trade, but again, you have the London market closed today. So you may see a lot of volatility. We may even see price just simply consolidating here. So the best bet or the best trade to take here would be below 1720, even if it's a scalp or anything like that, just so you don't get stuck in a consolidation. So that is personally how I would approach this. I would wait until 1720 is broken and then a continuation back down with confirmation, obviously. But if not, and since there is a London market close today, wait, there could be consolidation here. So you would want to wait until New York session comes out, or even, going into Asian session, or even tomorrow's London session. Wait for these levels here to be broken and then continuation back down, or wait for price to break out of this consolidation here and then look for some bullish moves. So that's pretty much it for gold. Um, let's go on to GJ. For GJ, let's start off with the yearly time frame. Clearly, we're starting to break some resistance levels here, but you have an all-time low that's being formed all the way down at 119,300. Price is starting to push bullish here, but you also have another minor resistance. This is pretty much when Brexit was introduced, and this is that entire drop from the financial crisis. That is that 186,900, 187 area. And then you also have that minor resistance level right about here. That price is starting to break above, which is that 152,100 or 152,200 level that we're starting to break above. We're essentially coming back up to fill the wick. And it makes sense because we have that optimism from GDP of the economy opening up, and then also testing kits that are free and that are being available to all of the citizens, British citizens, and then also the optimism around the vaccine rollouts in general. So about 460 pips for this wick fill to the upside. You also have price collecting this liquidity from down here. So let's drop down to the quarterly. In the quarterly time frame, you see how support is made right here. Same exact thing, consolidation, resistance, support, support, price pushing bullish, and this is a new quarterly start here. So we're coming back up and we're trying to fill the wick here to the left. So we have almost more than half filled this first wick right about here. So you have this entire wick for about 200 pips and the next one for about 440. So there's definitely a lot of potential here. So I'm going to make this a red line just so when we drop down to lower time frames, we know that this is a yearly resistance and even a quarterly resistance that we're taking a look at. Going on to the monthly time frame. So this is our next target. I'll make that black. So this is our next target here. As price, this entire range being about 278 pips. And then also that entire wick fill, if it continues, is about 428 pips total. So we're coming back in and trying to tap right into this consolidation area essentially. Dropping down to the weekly, last week we closed super bullish. We are starting to surpass this minor resistance to the left. We also had a nice little wick fill. So as I drop down to lower time frames, what I want to see is a break and retest of this level. So what I want to see on a weekly time frame is, for example, it's starting off bearish. So as long as this 152, let's say 800, 152 800 level is being respected. As long as that's being respected and price is making a bottom wick rejection, which when you drop down to the daily time frames would, a daily or 4 hour would mean a bearish candle close here in order to continue bullish, that would be an entry that I would be interested in. So what I'm gonna do is wait for this weekly candle to flip bullish and then continue back up into that 155 about 100 area for about 191 pips. When I drop down to the daily time frame, so I see that the current daily time frame has not, or the current daily candle has not broken the high of the previous daily candle. So if it just makes a bottom wick rejection without breaking below 152 800, I think we have a very nice move to the upside. So I'm going to wait until this resistance here is broken and then continue up, take partials at 20, 30, 40, 50 pips, but you have about 200 pips that you can target all the way to the upside. When you look on the daily time frame to the left, you have a minor level right about here, which is that resistance. So right at the candle closes, which is that resistance, also support, major rejection right here before price continues down. And that is that 153.500 level. So here as price continues bullish, flips bullish and then continues, you have about 40 pips. And then after that, there's really nothing stopping it from for price to continue up for that total of 200, just over 200 pips. When you come down to the 4 hour time frame, we have clear consolidation happening right into this zone. So again, no trade as of this London session. You want to wait until New York session. So either you wait for a sell opportunity where price breaks down here, gives you a retest, and then continues back down to 152, 100, or you wait until price breaks above this consolidation, continues bullish, so breaks above this, continues bullish. Since it's consolidating on a 4 hour time frame, there's going to be a lot of volume that follows. So you definitely want to look at those 15-minute or the 30-minute time frame for your entry, like we tried it out on the simulation in the last video. So whenever there's consolidation on higher time frames, like the 4 hour daily or even 2 hour time frame, there's always going to be volume that follows. So sometimes this would be the perfect opportunity for you to take an impulse entry if you're comfortable with impulse entries. If not, then obviously wait for a break and retest. So once price breaks above here, either you want to wait for a retest, a pullback right before price breaks 153 500, and then continues bullish, or if price just continues bullish and breaks 153,500, then you want to wait for a bearish candle close on either a 2 hour, 1 hour, or even the 4 hour time frame, and then take your trade to the upside for about 155.100 level. Dropping down to the 2 hour time frame, same exact thing, consolidation. So there's a very high chance even going into London session, maybe you see a wick out one way or another, but after that there's a very high chance that price is simply going to consolidate here. So wait until New York session, wait until Asian session, wait until the next London session to take your trades. Same thing with gold. So personally, the way that I'm going to approach the markets this week is not take a trade in London session today at all, or even the New York session. I'm going to wait until Asian or London session tomorrow in order for price to break out of these consolidation areas and some of these important levels. For example, gold, we're seeing it tap right back into a daily consolidation level. So wait for price to break out of those important levels, give you confirmation, and then take the trades. So highly suggest don't take a trade in London if you can today because it is a bank holiday. Wait until Asian session, wait until New York session, wait until next London session. There's going to be a ton of opportunities this entire week. Just be patient with it. Try to practice your discipline this week. Make sure you're not over trading, over risking, over leveraging, revenge trading, any of that. So you pretty much get paid to wait in this market. So just be patient with it and let the moves come to you. Don't try to force a trade. Good luck, everybody.